Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
What's going on there? It's September 6th. I'm Frank Curzio, it's the Wall Street Unplugged podcast. We're breaking the headlines and tell you what's really moving these markets. It's kind of nice when nothing's really going on. Earnings season's basically over. You get to digest everything. You go back, listen to conference calls. You still have the economic data here and there. You look at all the news channels trying to fill up time and try to make stories out of nothing or whatever. It's kind of funny, but I really like this time. It's a time where I find lots of ideas. They're not covering everything. With NVIDIA coming out and Microsoft coming out, you're looking at the details. How does it impact other sectors, other regions? What's going on? You know, AI, all these trends and everything. Now it dials down a little bit. Now you could, you rest and it's a lot of fun for me. This is the fun part. Researching, trying to find ideas. The only company I really cared about this week was AeroVironment. So AVAV, they don't report during like traditional earnings seasons, kind of like off earnings season. This is a long time holding, our longest holding in Curzio Venture Opportunities, which we're up a lot on, right? I mean, we started recommending this in the 20s and we added it here and there. And it's, over $100. But the drone manufacturer, one of the pure play drone manufacturers that have the most amazing drones. And that's everything that's going on in Ukraine and Russia, right? A lot has to do with drones. It's an area where if you're worried about defense budgets getting cut, they're never ever going to cut this. This is the most important part of their budgets. And these guys make the best of the best. So I always thought that they would get taken over because even though the stock's 100, it was a $2 billion valuation, $2.5 billion now. It's been a little bit higher, but they just reported yesterday and they blew out the numbers. The stock's up 25%. No surprise to us. Again, this is in Curzio Venture Opportunities. But we also recommend Dollar Stock Club. We were down a little bit going into the quarter, but now it blew out the quarter, and it's doing exactly what we figured it would do. It's kind of like this under-the-radar name. But now it has a $3 billion market cap. Still relatively small because I think they're going to do $700 to $800 million in sales. This quarter sales came in 40% higher than last year. How many companies can really say that outside of NVIDIA? Not many. Most companies are seeing a small decline in sales this earnings season, year over year. This company is growing 40%, right? You have this catalyst, this never-ending war. No one's ever going to end. They have no interest in ending, right? One of the most corrupt nations in the world that's listed as Ukraine, where I'm sure billions of dollars being funneled, whatever, but it's almost like a do or die where every one of Ukraine's going to die or we're going to win this war, which they can't win. That's the solution right now, which is just mind-boggling to me. Mind-boggling to me. As someone who gives a shit about people's lives. There really is no effort to negotiate? No. But again, our job is to find ideas for you, and this is one of them, right? If there's going to be stupid policies and idiots, which we have all across the political spectrum, let's make money off these idiots, and that's what we want to do. We also recommend, like I said, Dollar Stock Club. So I'm happy for those guys. But these guys, going into the quarter, and this is their fiscal first quarter, they're supposed to generate $2.60 in earnings. That was the forecast. They generated $1 in the first quarter. Just shows you the massive growth, right? So it's great to see it pop. And Dollar Stock Club, if you're not familiar with, that's free to all Wall Street Unplugged Premium members, which is just $10 a month. And Dan and I debate like the biggest stories in the market. We share tons of ideas, tons of stocks ideas, and we take one of those ideas each week and put it in Dollar Stock Club in that portfolio. Again, you have access to all this $10 a month, but Dale and I will really get into numbers tomorrow on Wall Street Unplugged Premium and break down AVAV because there's a lot more to talk about. We're going to talk about a few other things on that podcast. But today's show, I want to dedicate to a topic that's incredibly important, something that's going to impact everyone's portfolio. However, when this topic is mentioned, it's usually mentioned by crazy extremists that believe the U.S. is going to end, or by the other extreme, saying that you're an idiot if you think this is going to happen. You're a moron. It's never, ever going to happen. In other words, it's like every other subject or topic these days in terms of transgender, climate change, right? You got to spend $5 trillion. Well, could we spend $4 trillion? You hate climate change. You're an asshole, right? That's the way our politics are, right? It's yes or no. Illegal immigrants, abortion. You can go on all these topics, right? You have to pick a side. You can't be in the middle. You can't be in the middle, even though 80% of Americans are really in the middle of all these topics. But you wouldn't think about it if you're watching the extreme shows. And if it's Fox Business, you can have friends at Fox. I have friends at NBC. I've been on NBC as well. But, the MSNBC, I mean, just extremes. When you watch these shows, you want to go out and beat the shit out of someone. I mean, there's no happiness. That's why I like TikTok as a platform, even Twitter. I mean, Twitter I used to love. I used to post a lot. Twitter's become like the ultimate pump and dump. It's not just crypto. I mean, it's every, just people that I know. It's like the ultimate, let me pump this up. And when I'm doing great and pound my chest. And you see the anger there and the back and forth. And sometimes I'll call out people where I just like watching TikTok because it's fun. And I'm laughing the whole time and watching videos and it's cool. And, it's just crazy the way society is right now. But the topic I'm talking about, I won't drag this on any longer, is de-dollarization. And I remember listening to Doug Casey in the 80s, right, some videos, saying the dollar's going to lose its reserve currency status. I'm friends with Doug. I like Doug. Telling people to get your assets out of America. It's coming. Buy gold. It's the best safe haven, even though gold is not the safe haven asset people turn to when the shit hits the fan. It's always a dollar. It's always been. I remember Porter, his friend, had the End of America video, which, blew up that company. I mean, holy cow. You want to talk about increasing your total addressable market of newsletters. I mean, they thought that they had most people that were going to subscribe to a newsletter on their list, and then they added, that number might have been 50,000. Don't go crazy. And then they added, I think, over 200,000 new subscribers. Just showing how crazy the debt situation is and everything. But the thesis for the end of America was for the dollar to crash, right? And just continue to crash starting 2013. And what happened? The exact opposite. The dollar surged, right? We've heard this call so many times, and extremists and alarmists. I've spoken at major mining conferences, listened to 30-year vets tell me how the dollar was due, and to be honest, I was laughing at them. I poke fun at this thesis since the dollar was never going to lose its reserve currency status. I mean, we have the largest military, right? We protect tons of nations. We always pay our debts. Deficits never matter. They don't matter unless you stop paying, right? And we never stop paying. We always pay our deficits. Different story today. It's getting out of control, and we've seen defaults from China, $1 trillion here, and it's getting crazy, right? It's getting nuts now. But looking at that in the past, I was like, come on, guys, you really believe that? And like, buy gold. I mean, you're not going to see, people piling to the yuan or rupees, and not even the euro when especially euro, right? Most of those nations are in terrible, terrible shape. And economic growth, debt, and the fact that they have this universal currency, and then every one of them have their individual currencies. I mean, you look at the Eurozone, Germany's a lot different than Italy, right? So, and you're like, what the hell? But we have to come under the same umbrella and bail you out and things like that. It's tough. It doesn't really work. But when we look at the landscape today, it's clearly changed. And we're seeing de-dollarization, right? Fewer countries using the dollar as the reserve currency. And if you look at that, these are facts. You look at 1970s, U.S. dollar share of total global reserve currencies was 80%. In 2000, it fell to 70%. But now look at recently. So 2016, it was like 67%. Today, it's 58%. And a lot of that decline has come in 2022 alone. So the U.S. dollar saw an 8% decline in its share of global reserves, total global reserves. This is a real trend. Now, on the other side, when people debate this, people saying the dollar's never going to lose reserves currency status. I see people say, I travel around the world and every cab driver wants my U.S. dollars over their own currency. You look at the 2022 global meltdown, stocks, everyone, again, rushed to the dollar. This is all bullshit. And, it just screams. It is insane. And I'll be honest with you, right? We're independent, so I don't care who I offend. I'm telling the truth, and I think that's why so many people listen to this podcast. If you want to make a fortune in the markets, stay away from these asshole extremists. And these are cults. They refuse. They refuse to change regardless of the facts. They just have a thesis. It doesn't matter. The market's going to crash 30%, 80%, 70%, 40%. It's not going to crash when interest rates are zero. It wasn't going to crash. And every time it dipped. It was a buying opportunity because we're inflating the market. We're buying bonds. We're injecting more cash into it. We're inflating assets. We're inflating multiples. It wasn't going to happen. You need to change your opinion. 10% at best. I think it was 2010 or 11. You know what's going to go higher? Everything is going to go higher because of what the government is doing. And that happened. Every asset class surged. Anything that you were in outside of gold surged. And what pisses me off, I don't care if someone has an opinion and they have a strong opinion about it. I don't care. What I care about is these people who have this strong opinion about something. These are the people that make a fortune regardless if they're right or wrong. Yet everyone listening to them gets annihilated. That's my problem. I don't care if you go down with the ship, like the Lehman CEO. If you go down with the ship, it's fine. But when you're telling me something's going to happen and it doesn't, and your net worth increases by 3x over 10 years, when everyone listening to you and buying gold and buying everything else is getting annihilated, that's what I have a problem with. That's when it's my job to call you out. This is my industry. I've been doing this for 30 years. That's my responsibility. Okay, I give a shit. So you got these extremists on both sides saying, you don't have to worry about, you're crazy. Here's the real story on de-dollarization and why all of you, every investor, needs to pay close attention, because it's going to impact your portfolio. So first, the dollar's not going to lose its reserve currency status anytime soon. It's like streaming. Streaming is taking over the world. No more cable. Well, that's what you would think, and streaming definitely has momentum. It's going to lose momentum because most companies are realizing outside of Netflix, they can't make money on streaming. Good luck with the whole ESPN and Disney thing, right? ESPN's been making a fortune off of people who don't even watch ESPN because of the cable bundle subscriptions. Wait, they want to come off and just provide streaming, and they want to raise that streaming price to what is it, $5 to like $10, $15. Good luck. That's why, ESPN rents. They're a renter of stuff. They're not an owner of stuff. That's why they're having trouble getting a partnership. But even today, with streaming and how big it is, and most of us have streaming, it's still under 50%. You look at cable and broadcasting, it's over 50%. You would think it's gone, again, when you look at the facts. Anyway, even though the dollar won't lose its reserve currency status anytime soon, here's why it's extremely important. And very important, as more and more countries are doing what? They're weaning themselves off the dollar. Like China and Saudi Arabia just signed a new partnership agreement with future energy purchases, and they're going to be paid in what? In yuan. For the first time in decades, Saudi Arabia said it's open to trading its oil supplies in currencies other than the US dollar. Iran and Russia agreed to connect their interbank messaging systems and bypass the US-denominated SWIFT banking communication transfer system. I'll get to that in a minute. Argentina and Brazil proposed a common currency for trade. China and Latin America, this is Latin America's biggest economy, which is Brazil, announced they will conduct bilateral trade in local currencies, right? So circumventing the dollar. India and Malaysia agreed to settle trade in Indian rupees. India already pays Iran in rupees for crude and compensates Russia in rubles for their crude and different things and products. They have South Korea and Indonesia signed a deal to promote bilateral trade in national currencies, moving away from the US dollar. All of these stories have happened for the first time in the past 9 months. Countries never did this before. This is real. And why is this happening? Well, it happened when the U.S. decided to pull Russia from the SWIFT system, which was not on the table. It was supposed to be sanctions on the table, whatever. So the SWIFT system, that's the electronic system used in global trade, right? It's used by, I think it's 11,000 of the largest banks in the world to send money quickly around again, but they're trading partners. And by removing Russia, you essentially turned off their economy. And every country was put on notice because they were like, whoa, holy shit. They're looking at the U.S. go, wow, the U.S. could do this to us if something happens, and it would shut down our whole economy. So we need to do something about this right away. Because I don't know if you know, we kind of know, we don't think it's a big deal, but look at the rest of the world. We're the greatest nation on earth. We're powerful, right? It's, again, by far the leading nation in the world. So many different things. Earnings power, especially in companies, and, doing okay in the innovation part as well. But everyone else sees how crazy things are, where we can't even identify the difference between a man and a woman right now. They're laughing at us. These are real debates that you're seeing throughout, so many different places and colleges and our students, and what the hell's going on? And more importantly, we're pretty crazy when it comes to climate change. We're way past craziness. California's going to force people in the state to drive electric vehicles. They're going to force you to do that, even though they don't have the grid to support it. There's ambulances and everything. So what happens if the grid goes down and your grandma, your mother has a heart attack? Oh, we can't get her there. You better have a good bicycle with something on the back to get her to the hospital. How do you get to the hospital? You carry her? Don't worry, it doesn't matter. It's politics. But you're going to force people? The climate change is is insane. It's insane. It's insane. I'm not saying that you don't believe it, but the amount of money that's going into it, and listen, it's politics, right? If you get the government to pay for something, they don't look at checks and balances. They just write checks and say, okay, here you go. I don't give a shit, whatever. It doesn't matter. It doesn't matter if we lose money. We just print some more. They don't run like a business. That's the quickest way to become filthy rich. It worked for Al Gore. He's brilliant. I mean, he owns houses on the coastlines of California that he said 10 years ago that they were going to be underwater. Right? And you hire a few crazy American actors that are famous to promote the idea, and holy shit, we're going to die. And, again, most people believe in climate change? Yeah. Could we help? Yeah. Do people want to recycle? Yeah. But do we need $5 trillion where, Texas, their whole grid goes down the winter and holy pipes freeze and everything, and to the point where, I mean, look at Europe. Look what happened. Look at Germany. I mean, during the war, relying on that. Really? You're going to go after Russia? You crazy? That's 40% of your energy needs? You're going to go after that country? You're out of your mind? But that's what scares all these countries. I mean, what happens if China, Brazil, they don't want to participate in certain climate change initiatives? The U.S. could press a button and shut them down off of SWIFT, right? Which is run by basically the U.S. and also Europe. They could press a button and say goodbye. And everyone's like, holy shit. This is insane. What is it? We don't agree with the U.S., right? So now you're seeing this, right? It's real. It's led from countries moving away from the dollar. The dollar accounts for 58% of the global reserves. In second place is the euro at 20%. Now, the euro is not gaining that market share. Remember, the dollar went from 70 to 58% since 2016. It's not the euro that's gaining market share. It's every other currency. So it's fragmented. Thus the reason why the U.S. isn't going to they're not going to lose their reserve currency status. However, for the first time in our nation's history, this is a possibility. Or I should say over the past 80 years, it's a possibility. Now, there's going to be another individual currency capable of replacing the U.S. dollar. There's not. But this is why crypto factors in. Maybe it's why the SEC, even though they have no basis at all and no facts, why all these cases are getting reversed against crypto, why they want to get rid of crypto and not allow it. Because every single country is launching their own digital currency. The U.S. did it, which is a joke. And think about all the disruptive changes that you've seen. All the disruptive technologies. How do you have disruptive technologies? You make it cheaper and you make it easier. And you make it good for all parties. I always bring up Uber as the example. It's better for people. I know that my daughter took an Uber the other day, and I'm not worried because they screen the drivers. You can get out. You don't have to pay. The cars are pretty nice. The people are nice. It's cool. It's cheaper. And then it's great for Uber, obviously, right? They make a lot of money and huge margins. It's much better than taking a cab, but it's better for everybody all around. That's how you disrupt markets in all technologies. AI is going to disrupt, makes things easier, more productive. It's going to be better for a lot of people and a lot of companies, right? So the U.S. is launching their own digital currency. How does that benefit you and me? It doesn't. Not one bit. They're launching because they want full control over you. And this isn't some conspiracy theory, but imagine if all the money was controlled and say if I spent money on whatever, on a gas vehicle, and then I just bought a building that emits high carbon emissions, and I want to buy another building, they'll be like, nope, you can't do it. We're not going to let you spend your money on that, right? You spend too much. Good. I mean, think about having that. Well, you're not going to be able to spend on the things you want to spend. Say if it's like, weight loss or weight gain. We have these weight loss drugs, but you know what? You have McDonald's 5 times and, it's going to lead to your heart failure and, it's going to cost insurance companies even more. So we're not going to let you buy fast food this week. Imagine that. Why would the U.S. create a digital currency? It doesn't help us at all. I mean, I could transfer payments a million different ways. Zelle and wire transfers, and maybe I pay $20. There's no reason why they need to do that, but they're doing that. Why? That's the control. That's not why every other country is doing it, though. Because I believe as these countries launch their own digital currency, they're going to launch a universal digital currency. Because again, no country can compete with the U.S. on its own. But when you have oil coming from Russia and the Middle East, right, where the U.S. pissed off both nations, right? We blew up the Russian pipeline. If you don't believe that, I mean, come on. Russia blew up its own pipeline, right? That's what we're telling, right, through the media, right? Just like the media and all the shit that they told and how, COVID is killing more than 3.5% of the people. And remember that they ripped, down Donald Trump for that, and turns out it was less than 1%, right? I mean, again, the whole agenda with the media, right? So you're pissing off Russia, you took them off SWIFT, and then you're promising OPEC that you were going to buy back the oil that you depleted from the SPR, right? Strategic Oil Reserve from the Saudis, and now you piss those off. Now they're partners. Now you have a lot of oil. Holy cow. Throw in China and India, who also pretty much hate the U.S., and they control, 40% of the world's population. Also can produce goods very, very cheaply. Now you throw in Brazil along with the 30 other members who want to be part of the BRICS cult, and now you have an alternative to the U.S. So it's not one country by itself, but man, all these countries together, it makes sense for them. And that might sound crazy to you, but the U.S. is the reserve currency because it's backed by the full faith of the U.S. government, who always pay their bills. So what does this mean? It means if that happens, an alternative currency, I mean, do I sound crazy saying this? I'm not a crazy person. You listen to my podcast. I don't have like conspiracy theories and all this shit. And, it seems pretty real that something like this could happen. But if they have an alternative currency, the problem here is it's not going to be backed by the full faith of the U.S. credit. It needs to be backed by something. And that something is going to be gold. And that explains why every central bank has been aggressively buying gold over the past 2-3 years. Demand's at a half-century high. I mean, gold used to be 6% of total reserves. This is, in 2021, it's closing out on 10%. And the buying is being led by who? Russia, China, India, Turkey, the Saudis. The same countries that are now doing all these deals in non-U.S. dollar currencies. For the first time ever, by the way. And why is this door open? It's open for the first time because of politics. And what do? We called the Saudis and told them, listen, we're going to release oil from the Strategic Petroleum Reserve, which every president does for the election. You want to get oil prices down. I get it, right? So that conversation goes like this. The U.S. calls the Saudis and says, hey, you know what? We're going to reduce oil from the SPR. It's going to bring prices down temporarily so we can win the election. Okay, so please, whatever you do, Saudis, don't cut production ahead of the election. And if you do that, we, the U.S., will promise to buy a shitload of this oil back from you next year when we win, right? That's how the conversation went. The U.S. was supposed to buy back that oil from the Saudis, and you know what? It didn't. And we didn't for several reasons. And when it came down to the 60s, that's when we're supposed to buy it, and we said we're definitely going to buy it by October. We're supposed to do it, I think, in April, May, June, July. Well, all the way October was like the cutoff date, and then we had the debt ceiling. So we didn't have the money to do it. Now we're heading into an election year. There's no way that we're going to do it now, right? It's the reason why oil is surging, $90 a barrel. It's going higher and higher. Right? We also screw Russia by taking them off the SWIFT system. In doing this, we helped unite China, Russia, Brazil, India, even European nations, our allies, right? You look at the UK and France. And for the first publicly, they're going out publicly during summits saying, hey, you know what? We need to reduce our reliance on the U.S. dollar. They've never said that. I mean, they talk a big game or whatever, but not at summits when you got your flag show in different countries saying, hey, we got to get off the U.S. dollar. Now, the funny thing is, this could easily be stopped. I mean, we're the United States of America, the most powerful nation in the world. We're the one that buys so much stuff from these countries. We could place tariffs on every nation if we wanted to, similar to what Donald Trump did when, Macron, French president, said he's going to levy a 3% tax on large tech companies. And it's a done deal. And then Trump called and said, no, you're not doing that at all. And he said, sorry, it's done. He goes, well, if you do that, we're going to put 100% tax on all your wines and every product you import to the U.S. Macron said, all right, we're not going to do that. It's that simple. That's what happens when you're in power, which we are. I mean, we have total control over China. Yeah, they have rare earth metals and stuff. We're the ones that buy everything from China. And right now, we're in perfect position to do a deal with them since they have no leverage. Their economy is absolutely, they're doing everything they can and trying. They tried a lot of measures so far, and the recent ones trying to get a bid in the market. I don't think it's going to really work too much. And things are really, really, really bad in China. Really bad in China. We covered that for months and months and months through great sources. I appreciate all those emails that I get from those great sources in China. But you're looking at this saying, what, this could easily be avoided. And we'll buy all this stuff from China. We're pissed at China. We'll buy it someplace else. So it'll be a little bit more. We'll pay a little bit more. And that's fine. But we have lots of control since we're the biggest trading partner for many of these countries. That's the power we have if we have the right administration in there. And I don't care if you hate Trump, and I don't care who it is, but the fact that we're not doing anything is leading to this, and this is significant. But we don't have the right administration, and that's why we're in this crazy position where we're seeing all this stuff. This is real. These are real numbers. Now, why is this important to your portfolio? And that's the big question. Why is it going to impact you? Why am I talking about this for? Well, when you have great trading partners, which we've always had, especially in China, Asia, India, what we usually do as a nation is we're importing deflation. A lot of products are produced much, much cheaper. And this has helped us out of every major crisis dating back to World War II. Right? We recycle the trade surpluses into U.S. assets, which is debt, and we had domestic energy over the past 12 years, right? Became energy independent until recently, since we don't want to be energy independent anymore, right? Which is insane. We talk about even natural gas, right? Natural gas is now a terrible fuel, right? Less natural. We got to produce less, right? We're still going to use the same amount of energy, right? So it's the world, right? The global climate change, if you believe in climate change. If we're not producing it in the U.S., it's going to be produced somewhere else, which is going to destroy the climate, right? So it's going to produce someplace else that we're going to import it from. So why not just produce it here? Nobody wants to talk about that, right? No one gives a shit, right? Who cares? Climate change, right? Just no facts, no nothing, just we need to spend more money, right? Anyway, that's what we used to do. Recycle trade surplus and U.S. assets and debt and domestic energy and shale. So importing deflation and having this debt demand made it easy to control inflation using monetary policy, which we've done for so many years. But today, notice how inflation is not crashing. It's come down. It's still extremely high. Extremely high. I mean, we're over 4% inflation. To put in that perspective, we haven't had annual inflation over 4% since 1991. It seems like it's nothing because we were at 9%, almost 10%. But it's still extremely high. That's why the Fed's telling you we got to continue to raise rates. We're not ready to pause. They're not saying, hey, we're definitely pausing, which we're waiting for. People have been saying that they're going to stop forever. I believe they really need to stop now. First time I said that a couple weeks ago. But how many people on TV that that said we were going to stop? And this is December, November, December, January, February. We're done. Every investment firm, Goldman Sachs, all these people, everybody. We're going to stop. Well, Powell has stuck to his guns and said we got to get down to 2%. Otherwise, we're going to keep raising, and they have. But think how crazy. Notice how inflation is not falling like a rock, which every economist predicted over a year ago when we started raising rates. In fact, Powell said, this is a person that's brilliant. I don't care what you say. I know it's nice to kill the guy and just be like he's an asshole. I know. It's almost like booing the NFL commissioner. You got to boo the NFL commissioner, right? You got to boo him no matter what. Even though, again, you have your opinions on him, but, the NFL is what it is and how big it is today, and has a lot to do with that. But you got to, right? You got to boo Powell, right? That's just common. You have to do that. But this is a guy that his whole life has been economics. Studying, learning, surrounding himself by amazing people. And he said that inflation, this is just 18 months ago, is going to be transitory. We're not going to really need to aggressively raise rates. It's transitory. That's what he said. Notice how inflation remaining stably high, even though we raised rates by over 6,000%. What was it, 0.25 to 5.3%? The fastest increase in rates in the history of the Fed. And this is the reason why we saw Fitch downgrade the U.S. debt rating from AA to AAA, right? Nobody wants to talk about, it does have to do with politicians and what they're doing, but this is leading to all this other shit that I just mentioned. And again, the U.S., they're not going to lose their reserve currency status, at least probably not in my lifetime, but it still has massive implications for your portfolio. And a quick example of how I learned about currencies and the importance. Again, I've been doing this for 30 years, which means I got my ass kicked a lot. And that's why I like coming here and teaching you lessons. That's why I embrace when I get things wrong, because that's an opportunity to learn. And you want to be perfect in an industry that you can't be perfect in. It's kind of like you don't win at golf, ever. You never win at golf, right? You can't win at golf. You can win a tournament, but if you shoot a 59, you're going to go out there and say, I got to shoot a 58. You're not going to quit golf and say, okay, I shoot a 59, I'm good. No. Same with the markets. You're always going to get stuff wrong. You always learn. And one thing that I learned about currencies, it was around 2015. So a few years earlier than that, 2012, 2013, I invested in a few mining companies. And the market started to crash, of course, commodities, at least gold and silver. But I got 5-year warrants on many of those private placement deals. And I thought a lot of these stocks, I'm like, I just kept them and just forgot about them, basically. Now, this was back when the U.S. dollar was trading on par with the Canadian dollar, so no big deal. But in 2016, the commodity markets started to turn positive. Gold and silver caught a bid. A lot of junior mining stocks I bought through private placement started to surge. And guess what? My warrants on a lot of these, again, these 5-year warrants, were now in the money. Meaning if I bought into a private placement at $1, maybe the warrants were exercisable at $1.60, maybe, just as an example. A lot of these stocks are trading at $2 and above, so my warrants are in the money. So when I exercise them, I receive, say, $2. Exercise, I had to buy them at 60, I could sell it to, okay, that's nice. It's around a 25% gain. I'm like, okay, cool. Expecting a nice check, right? It's just, because I had to convert them back to US dollars, and this is 2016, and that was the rude awakening. Because I expected a check, say, for, whatever, if it was 25 grand or something, and I actually lost money since I bought the private placement in Canadian dollars, which most of us have to do when we're investing in junior miners, right? Most of them are headquartered in Canada, Vancouver, Toronto. You guys know in some of my newsletters. You have these, you got to take the legends off. You have to have an account in Canada a lot of times, and they charge you a lot to do that. It's a little bit of a pain in the ass, but this is where, I get a lot of great deals because I spent a lot of time and worked my way up in that industry to get deals with the best of the best in that industry, right? But from 2012 to 2016, the Canadian dollar depreciated around 30%. Like, holy shit. So that's when you realize currencies matter. Another good example is the athletes want to get paid in euros. Remember that? They traded 30% premium to the US dollar. This is around from 2008, 2014. A lot of them are like, oh, I want to get paid in euros, but you don't hear that anymore since 2020. It's basically averaged less than a 10% premium, and I think the euro traded at a discount to the dollar briefly. I think it was the last quarter of 2022. Everybody wants euros, right? No, I don't want euros. I'm okay. Dollars are good now. Those are examples. But currencies matter, and they matter for your portfolio, and that's why you need to pay attention to de-dollarization, because it's a big deal. Don't listen to extremists like, oh my God, the dollar's going to lose reserve currencies. If that happens, you have more problems in your portfolio. Chances are someone's going to be looting your house. There's going to be no cost. It's going to be an ultimate disaster if that happens, right? On the other side, they're like, oh, you don't have to care about it. The dollar. You do have to care about it. De-dollarization is going to lead directly to much higher oil and gas prices. Notice how what did the Saudis do when the U.S., I won't curse. I'll curse. They fucked them, right? So the U.S., right? When we fucked the Saudis, what happened? They cut production by over 1 million barrels in April. It surprised the hell out of the U.S. They're like, whoa, what are you doing? They would have never did that. They did it by surprise. And they did it because Biden promised to buy back oil from the Saudis in October and never did it. So you have higher oil prices, then you're going to have what? Higher natural gas prices. It's going to lead to what? Higher uranium prices, because that's an alternative. And now you're seeing a huge shift in politics where the naysayers are finally coming around to uranium. It's not because it's the cleanest fuel in the world and has 24-hour baseload power, unlike solar and wind, where you need the wind to blow and the sun to be out for that to generate power. Not for nuclear. It's the best source of energy ever. They already know that. It's not that. It's because, you have more lobbying, which resulted in politicians changing their minds, right? It's all about money. You might be like, Frank, that's a crazy theory. Well, you might think I'm crazy, but outside of a brief 3-week period between April and May of last year, uranium right now is trading at an 11-year high. Look at gold. And by the way, learning and spending time in Vancouver and on panels for 20 years and all this stuff and listening to all these experts, I did not like gold for a while because, I said it deserves a place in your portfolio. So, a place in your portfolio. Recommended some stocks here and there that I thought would be okay. And that didn't really work out until 2016, 17. But for most part, when you have, low interest rates and the market going much, much higher, nobody really wants gold. Why the hell do you want gold for? But today, there is a great case to own gold. And I believe gold's going to skyrocket from here. Because these central banks, this buying from them is not going away anytime soon. And I'm not talking about buying gold because I was told past 20 years, buy gold because it's a safe haven. Bullshit. It's not a safe haven. The dollar's a safe haven. I was told to buy gold because of negative interest rates. As long as we have negative interest rates, meaning that if inflation's higher than the risk-free rate, that's negative, right? So you see negative rates, and that would force people into gold because if you don't have negative rates, gold doesn't pay interest, so you might as well go into interest-bearing stuff that, and risk-free, which we have now 5%, right? So that was BS, negative interest rate, because we had negative interest rates pretty much for like 12 years. Gold has done nothing. I was told to buy gold as an inflation hedge. Again, 100% bullshit, because gold should have doubled and tripled if that was the case over the last 2 years, because we've never seen higher inflation outside of the 80s than we've saw. And what happened to gold? No, it wasn't the inflation hedge. That's not why I'm telling you to buy gold. Let everybody else buy gold because of those reasons, and they've held them for 20 years and underperformed the market by, hundreds of percent. That's their problem, not your problem. Today, the case of gold for gold is fundamentally driven. There have been hardly any elephant discoveries over the past decade. Little capital going into the sector. Little CapEx has been spent to find these new gold discoveries. You haven't really seen, you've seen a few. Consolidation, right? Newmont and what was it? New Gold, whatever. You've seen some consolidation, but you're not seeing it even the junior miners that have decent projects. You're not seeing these things get developed. Yet demand is going through the roof right now. This is supply demand. That's the best way to drive up something. That's why you drive up copper, oil, gas. This is what drive these commodities. But gold, it's like, hey, we need a safe haven. Well, you know what? Or inflation hedge, and that kind of died down with Bitcoin, because Bitcoin is a much better inflation hedge. Limited supply. You got the halving coming up. And what is it? How many? I don't even know how many. I think 75% of the Bitcoins have been produced, but over the first 15 years, there's been existence, around 15 years. But now to 2040, what are you going to have? Only 6 million produced because of the halvings. And the halvings coming out recently. And by the way, if you follow Bitcoin halvings, usually running up to the halving, which is April 2024. I cover this in my Curzio crypto newsletter, so crypto intelligence. Why this is important in April. Not only are all these ETFs are going to be launched, which is massive demand. The first time people are going to have access to Bitcoin without having wallets and all this stuff. The first time ever, right? We talk about trillions and tens of millions, maybe 100 million people for the first time, as these ETFs are going to get improved later this year. But the Bitcoin halving, and when you see the Bitcoin halving, it's a reason why you always run up into it. And then after it, the year after, it goes up tremendously the year after. Every single halving. It happens every 4 years. So you got a lot of positives, little weaks on crypto right now, but just, hold on to some of that stuff. Much better than gold in terms of inflation hedge. But when you're looking what's going to drive gold, you want to see the supply-demand imbalance, and that's what you're seeing. So when you're looking at de-dollarization, it's huge. I mean, it's going to impact your portfolio. And being out of these sectors, especially in the economic climate that we're going into, right? Yeah, but we're going into recession. We're not going into recession next month. We're going into recession. Now, Goldman Sachs just came out and said there's only a 15% chance of us going into recession. Back and forth. This is uncertainty. This is not good. I know higher interest rates are crushing some companies, and other companies are managing well. But you're going to continue to see this right now where, companies just, holy cow, everything is good with Dick's Sporting is good, and bang, 30% decline. Holy shit. You can only cut costs so much. You can only cut inventory so much. Eventually, you have to see your sales increase, and they're not increasing for most companies. So you look at de-dollarization, it's real. Doesn't mean the U.S. dollar is going to lose its reserve currency status, but it's going to have massive implications, and we're definitely seeing it right now. Oil, uranium. You're going to see it in gold pretty soon. I expect silver to do well and follow on its heels. Big impacts here. Now, tomorrow, Daniel and I are going to tell you the best way to position yourself for this, which will include individual stocks to buy along with one name, our favorite name, which will make its way into Dollar Stock Club portfolio. And tomorrow is our premium podcast, Wall Street Premium, and we charge $10 a month for that. And if you bought AVAV, which is down a little heading to caught up nicely now, that pays for the year for the Wall Street Unplugged Premium, right? This is a podcast where we share actual stocks, we share these ideas. That's why we charge for it. I don't give away that stuff for free. But it's probably the best deal you'll get on any investment product. And thus far, the reviews have been outstanding. Almost every one part of those products have been buying other products because they see us talking about these trends in depth and saying, these are the stocks you have to benefit, right? And we want to put that behind the paywall, not give all that away for free. And now, that's what you get for the $10 a month, which, we're doing very well selling that. And a lot of people are happy, and I'm happy to provide that product. Because it does give you at least one trading idea every week, which goes into Dollar Stock Club, which you have full access to under the Wall Street Unplugged Premium membership. So you guys are interested in that, you go to our website, CurzioResearch.com. Again, that was created. If you're looking for ideas, there's a newsletter, trading newsletters. I go for $1,000, $5,000, $3,000. I know I'm in the industry. This is $10 a month for that. So it's something that we offer that's really, really cool. A lot of people are happy with it. It's not on iTunes, but if you're interested, go to CurzioResearch.com and you can subscribe that way. So, guys, that's it for me. Looking forward to breaking all this stuff down for you, individual names, in Wall Street Premium podcast tomorrow with Daniel. Be really cool. And I'll see you guys then. Take care.